everybody. Welcome to Friday, the 25th of February 2022. We have an escalation of the situation in the Ukraine with Russian tanks and troops moving into the capital, Kiev, at this time. I'm fully expecting hand-to-hand combat to come today. There's recommendations from the Ukrainian government for citizens to throw Molotov cocktails at any Russian soldiers if and when they see them. It's a really terrible situation, and my heart does go out to the people in Ukraine right now. So moving across to these markets, we can really see. I really want to talk about the SPUs because yesterday, there was a lot of talk coming into. We were here through the European morning, and sort of coming into then the open. You can see really from that sort of Asia Pac session, the European session down the lows here. Once we had the open, basically this market wanted to snap back up. So here's where we opened, and here is where we closed on the SPUs last night. Um, Really cheap markets, and US traders really coming in and buying that dip. And some of the statistics around war and invasion and whatnot really do speak towards buying the dips rather than selling off on these markets. And so that's sort of historical reference. There's a couple of charts going around online and on Twitter with those statistics. So for me, again, we've got another sort of sell down this morning in stocks, US stocks. And European stocks, that is, but largely I think we're going to be looking at more of a bid back on up today over over the lows we saw yesterday. We're just coming shy, for example, here on the Nasdaq of the 500 daily exponential moving average, coming in just here around today 12,819s. It has been a fantastic level to be buying over the years, but we're just not really getting in on that. Yesterday, is there more downside in these markets? Yeah, I think there is, but I think it's from that performance we saw yesterday, I think more downside is probably going to be to do with the closing out of the March contract expiry, this quarterly contract for equities. It does feel like there is a bit of unfinished business to be done down here on the Nasdaq 12903s, 819s, in and around that area. So let's just hide the couple of these moving averages as we're going along. So for me, I mean, I was looking at there being a late bid last night in US equities. And I suppose, to see that clearly, you have that S&P chart here. And so, late in the session, really driving, especially from the 6 o'clock and 7 o'clock GMT markers. We just drove really strong into the close, back up to that line in the sand, an old gap area, 42.8950s. So for today, look, I think we have to hold 42.12s on the SPUs before we can then start to look to hold this for a trade back above the highs of yesterday, 42.89 halves. And if we can't hold the 42.12s, I think we're going to make new lows on the week. But generally, I think they would be dips to buy. If we make a low below the 40.95s, I would generally be looking to buy in to this market at that time. So moving across to the Dow, it's kind of wrapped up on this line in the sand. It's quite an old one actually, but essentially we're kind of holding here generally as a bit of support right now, 32.818s. And I think we could get another push back to 33.414s, but we need to hold this area as we come into the US session. If we then want to be getting long and we're looking for higher prices, 33.414 is target there. Big line in the sand, as you can see, on a couple of occasions back here. So looking at this on the daily, well, here we are here. So see that line in the sand really coming in. First time it came in was March 2021. Tested again May 21 and June 21. So we're not, you can see the market is trying to push and break down on this general line in the sand. And so, if it does, we have this 500 exponential or 500-day exponential moving average, 31,675 is below, confluent with this 31,537 area. So let's keep an eye out on that. Should we break down this line in the sand in the Dow today? Oil, more downside. We have now on the horizon with oil another release, global coordinated release from the SPR in the US. I think, this time there was China, UK, I think Europe involved in the last SPR release. On this one, we're talking about bringing in Japan and a couple of other countries, so to make it a bigger coordinated global strategic petroleum reserves release. And so that's why you're really seeing this big pullback on oil yesterday from the high area. Yeah, I mean, look, it got up to about 100 spot $56 yesterday, but really that $100 marker, all important there. You can see multiple occasions, one, two, three, four attempts really to get above and hold above, and just not able to do it. And we came down, quite a significant amount really to close in at 93. So about a $7 pullback here. Well, it's $6.50 pullback, right, on oil. It's just big moves for WTI at this time. So for me, it's a little hard to be buying into this pullback yesterday, given that we have, not only do we have an SPR release on the books now, but yet to come, but it's definitely going to happen. But we also have the Iranian nuclear situation potentially releasing another 3 million barrels of oil per day onto the global market. So, yeah, I mean, it's good for the supply crunch that we have and the tightness in the oil picture, but is it enough to keep us away from having to trade up even further and hold treble digits on the WTI contract for the coming months? I don't think so. I think we could sell off probably, we could probably go back down to like 86s, maybe lower, but I think the market is going to then, rally back up. Where would that be from? Well, sure, the 89.22s is a good looking area here. It's quite hard to forecast where this would take a turn, but we'll monitor this as we go along through the coming days and weeks. What else am I seeing here? Nat gas being a little bit of a devil here on the 493s. I think there's a lot of people, really do want to be on the longs in nat gas, and it's just really getting the timing there. Getting the timing right is the trick with nat gas. So it's kind of blowing out either side of this 493s. For me, best area to get involved is down here on the gap low. So this gap in yellow still remains open. You can see it's yet to trade out from kind of 410s down to that 386s. So once we get down here, I am going to be looking for longs, but open to the point that there is also a second gap still open on nat gas down at 295. So let's again see how we trade on this throughout the coming days and weeks. And I think it's going to be a matter of days, probably this week, for nat gas to resolve these gaps. Gold, yeah, also really taking a big pullback there yesterday, getting on up to the 1975s on the high, 76s on the high, and then absolute mega pullback onto the 1881s level before finding a bid to come into the close there. So this is a wild market. It kind of goes in fits and starts, really, gold. So I mean, for me, I'm interested in looking at buying again in around 1900s. Currently it's kind of actually really caught up in this line in the sand, which was a former open gap back from the 21st of February there to the 22nd. So yeah, probably I'm gonna leave that on there, that area, because just to see how strong or weak gold may be. All right, that's it for me for another pre-US session. Again, really tragic stuff going on in Ukraine right now, and you know, let's see what the globalized response is throughout today and the weekend to this. So, all right, have a good session. Only take the good trades, and I'll see you soon. Bye.